Governments spent the last decade calling Bitcoin a scam. Now they're buying it. The United States announced a strategic Bitcoin reserve. El Salvador made it legal tender. China banned it publicly while the government quietly accumulates. Corporations hold billions on their balance sheets. This isn't retail FOMO anymore. This is nation-states and institutions positioning for a future where Bitcoin is part of the global financial system. This video breaks down why countries are buying Bitcoin, which ones are doing it, and what it means for you. Bitcoin threatens government control. Governments control money supply. They print currency. They inflate debt away. They freeze accounts. They sanction countries. Bitcoin removes all of that power. You can't print more Bitcoin. You can't freeze a self-custodied wallet. You can't stop cross-border transactions. For governments, Bitcoin is a loss of monetary sovereignty. That's why they fought it, banned it, called it criminal money. But something changed. Governments realized Bitcoin isn't going away. Banning it doesn't work. China banned mining. Miners moved to the US and Kazakhstan. India threatened bans. Bitcoin kept growing. The question shifted from, can we kill it, to, do we want to be left behind while other countries accumulate? Game theory kicked in. If your adversary is buying Bitcoin, you need to buy Bitcoin. If you don't, you're voluntarily weakening your position. This is the prisoner's dilemma playing out at the nation-state level. In 2021, El Salvador became the first country to make Bitcoin legal tender. President Nayib Bukele bought the dip repeatedly. The country now holds over 5,800 Bitcoin, worth roughly $520 million at current prices. Critics said it would collapse their economy. It didn't. Remittances became cheaper, tourism increased, Bitcoin ATMs appeared everywhere. They're building a Bitcoin-powered geothermal mining facility using volcano energy. Whether this succeeds long-term is debatable. But El Salvador proved a country can adopt Bitcoin and survive. That changed the conversation globally. The US announced plans for a Bitcoin strategic reserve in 2025. The idea: hold Bitcoin the same way the government holds gold, oil, and foreign currency reserves. Why? Diversification. The dollar is still dominant, but its share of global reserves is declining. Holding Bitcoin hedges against that. Geopolitical leverage. If Bitcoin becomes a neutral settlement layer for international trade, countries without Bitcoin holdings are disadvantaged. Debt strategy. If Bitcoin appreciates significantly, reserve holdings offset a portion of national debt. This isn't confirmed policy yet, but the fact it's being discussed at the federal level is massive. Confirmed holders: El Salvador, 5,800 plus BTC, Bhutan, 13,000 plus BTC from mining, Ukraine, seized from criminals, holds approximately 46,000 BTC. United States, confiscated Bitcoin from Silk Road and other cases, approximately 210,000 BTC. Rumored or likely accumulating, Russia, reportedly mining and accumulating to bypass sanctions. China, banned but state entities possibly hold through proxies. UAE, positioning as crypto-friendly hub, likely accumulating. Countries exploring it: Brazil, Argentina, Switzerland. Some cantons accept Bitcoin for taxes. The trend is clear. Countries are either accumulating or positioning infrastructure to do so. Global debt is at all-time highs, over $300 trillion. Most countries can't pay it back. The traditional solution: inflate it away by printing money. But that destroys purchasing power. Citizens lose trust. Bitcoin offers an alternative. It's capped at 21 million. No government can print more. It's also neutral. The US controls the dollar. China wants to challenge that with the yuan. Bitcoin is controlled by no one. For smaller nations stuck between superpowers, Bitcoin is a way to opt out of being forced into dollar or yuan dependency. Russia was cut off from SWIFT after invading Ukraine. Billions in reserves were frozen. International payments became nearly impossible. This sent a message to every country: if you anger the US or EU, your money can be seized. Bitcoin can't be seized if held in self-custody. It can't be blocked by SWIFT. It's a financial escape hatch. Russia, Iran, North Korea, all are reportedly using Bitcoin and crypto to bypass sanctions. This is why the US is now interested in accumulating. If adversaries use Bitcoin to root around dollar dominance, the US needs Bitcoin too, or risk losing leverage. Nation-state demand is different from retail demand. Retail buys $100 here, $500 there. Countries buy thousands of Bitcoin at once. They don't sell during dips. They accumulate strategically. This creates a supply shock. If just 5% of global central bank reserves shift to Bitcoin, that's trillions of dollars chasing 21 million coins, most of which aren't for sale. The price implications are massive. Some models project $500,000 to $1 million per Bitcoin if sovereign adoption accelerates. These aren't guarantees. But the logic is sound. Fixed supply plus institutional demand equals price pressure. If countries are buying Bitcoin, it validates the thesis. This isn't just speculation anymore. It's being recognized as a strategic asset by the most powerful entities on Earth. For you, it means Bitcoin is here to stay. The "it could go to zero" risk is shrinking. Countries don't buy assets they think will disappear. Regulatory clarity improves. If the US holds Bitcoin reserves, they're not banning Bitcoin. They might regulate it, but they won't kill it. Your position is early. Most people still don't own Bitcoin. Most countries are just starting. You're ahead of the curve if you're accumulating now. Here's the dark side. If governments accumulate massive Bitcoin holdings, they gain influence over the network. They could collaborate to impose soft forks. They could use holdings to manipulate markets. They could require KYC on all transactions through regulation. Bitcoin was designed to be decentralized. But if 10 countries hold 30% of the supply, how decentralized is it really? This is a risk most people aren't discussing. Nation-state adoption validates Bitcoin, but it also concentrates power. If one country announces a major Bitcoin reserve, others will follow. No one wants to be the last country holding only fiat while everyone else holds Bitcoin. This is game theory. The Nash equilibrium is everyone accumulating. The first movers get Bitcoin at lower prices. The late movers pay premiums. We might already be in the early stages of this race. El Salvador started it. The US is positioning. Other countries are watching. If this accelerates, the next 5 years could see a scramble for Bitcoin supply. It's not just countries. MicroStrategy holds over 400,000 Bitcoin. Tesla held Bitcoin on its balance sheet. Block, formerly Square, holds Bitcoin. Publicly traded companies are treating Bitcoin as a treasury asset. Why? Same reasons as countries: hedge against inflation, diversification, belief in long-term appreciation. When both corporations and countries are buying, retail is squeezed. The available supply shrinks. The price adjusts accordingly. If Bitcoin becomes a reserve asset, fiat currencies don't disappear. The dollar, euro, yen, they'll still exist. But their role changes. Instead of being the only store of value and unit of account, they become mediums of exchange, while Bitcoin becomes the settlement layer. Think of fiat as the checking account and Bitcoin as the savings account. You transact in dollars. You save in Bitcoin. Over decades, this could shift massive wealth from fiat into Bitcoin. Countries with the most Bitcoin gain leverage. El Salvador is tiny but now holds an asset superpowers want. Bhutan, a small Himalayan nation, holds more Bitcoin than most large countries simply because they started mining early. This reshuffles geopolitical power. Energy-rich countries with cheap electricity, Russia, Kazakhstan, Iceland, Norway, can mine Bitcoin. Countries with strong rule of law attract Bitcoin businesses and holders. The 21st century might see power shift from military strength and oil reserves to Bitcoin holdings and energy capacity. Some believe Bitcoin will eventually replace gold as the global reserve standard. Gold backed currencies for centuries. Then the gold standard ended in 1971. Since then, currencies are backed by nothing, just trust in governments. Bitcoin is digital, divisible, verifiable, and scarce. Gold is physical, hard to transport, and hard to verify purity. If Bitcoin proves itself over decades, it could become the new anchor for global finance. This is speculative, but it's not impossible. Countries accumulating now are betting on some version of this future. Slowly, then suddenly. Bitcoin has been around since 2009. It took until 2021 for a country to adopt it. It took until 2025 for the US to seriously discuss reserves. That's 16 years. But once the race starts, it accelerates. If the US announces a 1 million Bitcoin reserve target, every other country will respond within months. The timeline compresses. What took a decade to build could cascade in 2 to 3 years. We might be at the inflection point right now. You can't compete with countries. You can't buy thousands of Bitcoin. But you can position yourself ahead of the majority who still think Bitcoin is a scam. Accumulate what you can. $50, $100, $500, whatever fits your budget. DCA through volatility. Self-custody. If nation-states are buying, exchanges become targets. Move significant holdings to hardware wallets. Educate yourself. Understand why this is happening. The more you know, the less likely you are to panic sell when the price moves. Hold long term. If countries are buying for strategic reserves, they're not selling in 6 months. Neither should you. Not everyone agrees this is positive. Some Bitcoin purists argue nation-state adoption corrupts Bitcoin's purpose. It was supposed to be peer-to-peer money for individuals, not a reserve asset for governments. If countries control most of the supply, Bitcoin becomes just another tool of state power. There's truth to this. But the reality is Bitcoin can't stop nation-states from buying it. The question is whether you position for the world as it is or the world as you wish it were. Nobody knows how fast this plays out. It could take 5 years. It could take 30 years. It could stall entirely if Bitcoin fails technically or politically, but the trend is clear. More institutions and countries are entering, not exiting. More infrastructure is being built, not dismantled. More legitimacy is being granted, not removed. The direction is set even if the speed is uncertain. Comment accumulating if you're stacking Bitcoin regardless of what governments do, or watching if you're still deciding. Next video, I'm explaining Bitcoin's energy consumption, whether it's actually an environmental problem, and what the data really shows. Subscribe to Unbanked. The old money had a head start. You have the internet.